Hello everyone, my name is Theo. I'm a certified financial technical analyst, and today I will walk you through all the major markets with all the relevant technical information, and also at the end we will share the fundamental analysis. We start with the chart of gold. If we check what happened last week on the weekly time frame, of course, we saw that gold ended with a bearish candle, significantly closed below the previous week's low, and that has more bearish than bullish implication. On the daily time frame, last Friday, the price ended with that inverse hammer, and it has bullish implications, obviously. And we see that the market is currently at a soft level of support. So from this point, we can see a further bounce to the upside. Just keep in mind that the high of this invert hammer can be used as an intraday resistance. The time frame will keep your chart analysis relevant for the week is the 4-hour time frame. On the 4-hour chart, the price is clearly rejecting this support. At this point, it printed this long bullish candle with a long lower wick, rejecting all the swing lows. And this has more bullish than bearish implications. Now, keep in mind that overall, this market creates lower lows and lower highs, and this can fuel some further bearishness. It's better to use the resistance and support and trade between them rather than to try aggressively and sell the support or buy the resistance. If the price breaks below this low, we might gonna see the market coming to fill all this room down there. But if the price breaks above this high, not this current high here, but this high up there, then we might gonna see a nice rally towards the 3,400 level. Euro US dollar weekly time frame, the price ended as another inside candlestick. This long bearish candle host the last 2 weeks candlesticks. This calls the mother candle. Now we have the inside candlesticks. And if we drop down to the daily chart, the market pretty much moves sideways. We can map this resistance at the top and the support at the bottom, because fairly saying, the lower the time frame we go, the more relevant these resistance become. On the 4-hour chart, the price created this high there. Now we have the swing low down here. If the market keeps the bearish implications, we can see this support to be the first target. If the price closes decisively below this support, definitely we will trade all the way down there. But in the other case, if the market breaks above this key level of resistance, we're gonna see a nice rally all the way up here. But usually we're going to go down to the 5 minutes, 15-minute chart, even to the hourly time frame. Sometimes we can trade purely price action setups from there. Sterling open aggressively during the London trading session. Today, the price last week closed slightly below this resistance. It created a nice higher high and higher low formation, and this is more bullish. On the daily chart, the market remains within the Thursday's high and low. 4-hour time frame, I like this pattern here. The market is in a strong uptrend. This will be our relevant support. Whether the price reach this support today or if it's going to bounce on that intraday levels and it will move upward. Anyhow, if the price reach this support and breaks through that, we can use this inside support as the next level. A break below this one can find the other support down here. So keep these levels on your chart. They are very important. If the price now breaks above this high, the uptrend will continue, and we can measure even the distance between from here to where the dip stop with the retracement stop, and find the Fibonacci extension to use it as our target. Or if you want, you can check the levels on the daily chart and you can see that the next significant level is up here. Australian dollar against the US dollar. Let's start with the weekly. Last week, the market again remained inside this bearish candle like the other major currency pairs. This is a more long leg doji candle, has bearish implications at this point. Daily chart, everything now is trading within this long bearish engulfing. The more detailed market analysis we do here, if we use these swings highs and this low, then this high price made a lower low, and at this point the price retraced 61.8% of this move from A to B. So the market now might gonna find some way to drop further down. Also, the Reserve Bank of Australia cut interest rates last week, and that fueled the downside of the Australian dollar. On the 4-hour time frame, the price created equal lows. This is the high now, higher highs and higher lows. At this point, equal lows. Let's keep an eye on that one. I like this formation. It might gonna hold as a bearish flag, and the price, I believe, if it's gonna drop, we're gonna reach this 0.64200 level. From the technical point of view, definitely this is how we can take advantage if we see the break of the 0.64800. USD Japanese yen weekly time frame, we see a bearish engulfing price action here, but it's more like a long leg doji bearish engulfing. Although it has a higher high and a lower low, it's still under bearish implications. Daily chart, very sideways here. The way we can use this information is to see if the price breaks above this high or below this low. Currently, the market is in a no man's land, and it's better if we wait for a clear direction before we commit to either buy or sell. In case the price breaks above this high, this becomes the first area of resistance. If we break below this low, the market has all the room to reach this level. Of course, always capitalizing on lower time frames. Pound yen has an interesting pattern here. Weekly time frame shows that the price stopped at this significant resistance, which is great because the price didn't break through the resistance. And we know that if the price remains below the resistance, we can find some good opportunities on lower time frames. Daily chart, the market created this inside candlestick last Friday, followed by this hanging man at resistance, which has bearish implications. For our time frame, this becomes one of my favorite patterns. It's not an ascending triangle, but it's more than a falling wedge around resistance. Falling wedge around resistance signifies that the reversal might be around the corner. For high probability trade setups, we wait for the break of 198.8. We don't rush to sell here. US oil, last week the price ended as a doji candle, another long leg doji candle. Daily chart, it's a kind of sideways, as we see the candles didn't make significantly higher highs or lower lows. 4-hour chart, that's a pattern that signifies more reversals if we see the bounce from here. But again, the market is clearly in a downtrend, forms lower highs and lower lows. We just see that the buyers now stepped in a bit aggressively compared to the previous retracements, and retracements like this during extensive downtrends can lead to trend reversals. To confirm a trend reversal, first we have to see the price making a higher high, and then we can look for long positions, or more aggressive buys can come from the bottom here. Nasdaq weekly time frame ended with a long leg doji candle. After breaking these highs, made an all-time high. This has bearish implications. On the daily chart, the price follows this lower low and lower high formation, which is also bearish. For our time frame, this is a kind of a bullish flag, but to trade the bullish flag as a pattern, we have to see the break above 23,800. If we see the price keep moving lower, the next support level will be this one here, and after that it's going to be that one. So if you are trading short here, mark your supports on the chart and try to trade between support and resistance. If the price breaks above 23,800, the next area of resistance, it's going to be this one up there. Last week, Bitcoin created a new all-time high at 124,000, but the week didn't end it favoring the buyers. This reversal price action right there can cause the market to drop further down. If we keep moving lower, the price will reach this level 112 actually here. If the price keeps moving lower, the next level of support, it's going to be below 100K. There is a lot of room until this move, and that's on the weekly scale. But if you do day trading or some kind of swing trading, then definitely you go on every weekly low. It's going to be your support level. Daily chart. Higher high with negative divergence. If you plot any RSI or MACD, especially the MACD, you're going to see a strong negative divergences on the indicator. If the price keeps moving downwards, the first level of support 112,000. Further downward move, this inside support can be tested, and also this one between 104 to 105,000. Regarding this week's fundamental news, today, Monday, nothing on the calendar. On Tuesday, from tomorrow, during the London trading session, volatility, liquidity, both expected to be as usual. In Canada, they will report the consumer price index, and the forecast shows for the month an increase of 0.2%, and for the yearly, which is the most important, the percentage to remain the same. If we're going to see a follow through with positive CPI number, the Canadian dollar, definitely it's going to rally. On Wednesday, the focus will be during the Asian trading session on the Kiwi. Why? Because the Reserve Bank of New Zealand are keen to drop their rates by 25 basis points, which if the Kiwi follows through, this can have negative impact on the New Zealand dollar. Just before the London Open in the UK, they will report their consumer price index, and the expectation is to see an increase by 0.1%. This can definitely positive the sterling if the CPI will rise. And usually over the years, we saw that sterling becomes very sensitive to this event. If you are trading before the London Open, just be a bit cautious, because this event is going to add a lot of volatility. The last event for the day will be the FOMC minute in the US. And if you are trading any kind of indices or the US dollar around that time, this is going to fuel the volatility in the market. Thursday, we start with a European trading session. They will report in Germany the manufacturing and the service purchase manufacture index. As the number remains below 50, this can have some negative impact for the euro. The services PMI, on the other hand, it's expected to remain above 50, and this can favor the price of the euro. Now, in any case, this will add some volatility temporarily, but it's not an event that causes the market to experience trend reversals. Next one, same events, but in the UK, the manufacturer PMI is expected to remain below 50, while the services above 50. This also can have some positive impact for the Great British Pound. Again, it's not an event that it will change any major market trends. The focus will be on the manufacturer and services PMI during the New York trading session, because here is where the volatility gets affected by these events, and trading around this time, you can experience the spikes in the price. On Friday in the US, the only major event for the day will be the Chairman's Powell's speech, and also the 2 days Jackson Hole Symposium. On Saturday, the 23rd, the markets are closed. We don't expect to trade the sterling, so even the Bally's speech won't affect anything into our trading.